What's going on, y'all? Matt Garland here, NMLS number 58700, better known as MG the Mortgage Guy. We are live, we are blessed. Thank God for another day. Welcome back to the channel. Make sure you guys like, comment, share, subscribe, and hit the bell for notifications because we got new videos Monday through Friday. We try to be at 4 p.m., but sometimes it don't work out like that. Like today, it didn't work out for 4 p.m., but we're here now, and that's all that matters. All right? So, again, like, comment, share, subscribe, hit that bell, and make sure you guys go to mgbookstore.com. mgbookstore.com. Pick up the latest and greatest books that I have. New book coming out next month, too, so tap in. So that way you get the pre-sale of that. Got the Real Estate Investors Manifesto, House Economics, and I'm also having a webinar this Wednesday, Thursday, a 2-day webinar. I'm actually going to type it in the chat right now. If you go to mgbookstore.com, you can get tickets to it. If you're a real estate professional, this is a 2-day webinar. We're talking about everything from monetization, social media, branding, working with investors, both here in America and international or foreign investors. And yeah, it's 2 days, tons of information, probably around 6-7 hours of content. So make sure you guys check the pinned link right there, or go to mgbookstore.com. If you are a real estate professional, loan officer, realtor, whatever the case may be. All right, so today's video, we're talking about the differences between, we got Tukes Productions in the building as well. And we're talking about the difference between FHA and conventional and what's best in today's market.
Yes.
Yes. All right, Tukes. So what do you want to know?
All right. So I think it was Friday, whenever we were on live last time. Somebody had asked, what is better, FHA or conventional? We didn't have the time to talk about it too much. So you did mention that it depends on several different factors, but I'm assuming it depends on interest rate somehow, or whatever is going on in the market based on whatever house you're trying to buy or whatever your situation is. So can you kind of like explain why somebody would want to go with an FHA loan over a conventional, vice versa?
Okay.
For a first-time home buyer, especially, more importantly.
Okay. So first, Toya Green, to answer your question, you get the ebooks, not the hardcover books, when you get the VIP for the webinar. All right. But why would someone go with conventional versus FHA? Well, there's many different reasons why. And depending on, unless we're going to speak from a primary residence perspective, right? Not investment property, because FHA, you can't do investment property. You could do owner-occupied multifamilies.
Okay.
But FHA is predominantly geared towards low credit scores. That's why it really was put in the marketplace. And that's why a lot of people talk about FHA, is because of low credit scores.
Okay.
You can go down. Technically, FHA, what people don't even realize, FHA minimum score is like 500.
It's not a 580?
But lenders have what's called overlays, which they'll say, okay, we want 580 minimum. There's some lenders out there that might do 560, but you got to put 10% down or more, right?
Okay.
And have lower debt to income ratio. But most lenders in general will be at like a 580 credit score.
Okay.
You know what I'm saying? Conventional 620. So from a credit score perspective, you can potentially get approved for FHA mortgage with a lower credit score. And interest rate wise, if you are in that lower bucket, it won't be as bad as you think it would be, right?
Right.
Because the program is designed to help borrowers who have low credit scores, low down payments.
Okay.
Now, with conventional, if you have a 620, 640, 660, you might get, let's just say if the market rate today is 6.5% for a conventional mortgage. If you have a lower credit score, you're probably going to get a rate like in the 7s right now for a conventional on a 30-year mortgage, like 7.5%. Because conventional will penalize you more because you have that lower credit score. Whereas if you have a 620 with FHA, and let's just say the going rate for FHA is 6% today, for example.
Right.
You might get a 6.5 or 6.6. So you won't be a point and a half higher with FHA with a low credit score. Now also with conventional, versus FHA, when you're buying multifamilies, that's really where you see the big difference. With multifamilies, with FHA, you can put down 3.5% across the board.
For every single property that you're...
4 family, 3 family, 2 family, 1 family, condo, minimum is 3.5%.
Okay.
With a conventional mortgage, single family, you can put down as low as 3% if you qualify for one of those specialty programs that they have for first-time home buyers, or as low as 5%. But when you go to multifamilies, even if it's owner-occupied, that's when you're going to see a larger down payment requirement. It could be 15% to 20% down payment, right? And then to use the rental income to help you qualify with a conventional loan, if you don't have landlord experience, for the most part, you can't use that rental income to help you qualify. With FHA, you can.
So how do they check for like landlord experience? They have to see if you have
On your
actually already
taxes.
have properties. So that's with the conventional. So FHA, you don't even have to worry about that. Like they don't even look at your portfolio, so to speak.
It doesn't matter.
Okay.
It's the program. The program is designed that way.
Right.
So it'll be more advantageous for someone who's buying a multifamily that may not have the down payment to go conventional to go FHA. But if someone is buying a single family, and let's just say they have a 700 credit score,
Okay.
but they still only want to put down 5%, they'll probably be better going with conventional in that matter because the PMI factor. See, FHA has, their PMI is called MIP, Mortgage Insurance Premium. And when you do an FHA loan, remember, if you put down less than 10%, that PMI is for the life of the loan.
Okay.
With conventional, if you put down 5%, that PMI is until you get 20% equity in the house, and then at that time you can request for your PMI to be removed. You know what I'm saying?
Okay.
So the PMI factor, you're not married to your PMI for the life of your loan with a conventional mortgage. With an FHA mortgage, you're married to that loan with the PMI. The only way out of it is to refinance out of that FHA loan to get rid of your PMI. With conventional, you can refinance as well to, if the rates are advantageous for you, to remove the PMI. But if you don't, let's just say market never goes down, and if you build equity, you paying down your balance, things like that, you get 20% equity in there, you can call to have it requested to be removed.
Right.
So from that standpoint, like again, if you got a 700 or higher credit score, you got the 5% down payment, your debt to income ratio is low, it might be more advantageous for you to go conventional than it would be FHA. So again, it just really depends on the person and their profile. So like people always ask that question, what's better, FHA or conventional? I don't know.
Yeah.
Because it's on you.
Right.
What's better, the better tool to help you achieve this goal of buying said property?
So with the insurance, how much do you have to calculate or factor in for FHA? I'm sorry, for a conventional?
Say that again?
For PMI.
For PMI.
Yeah. So like, is there any way you can give like an example of like example, like let's say if you're buying a house for like 100K or something like that, you know, over the life of whatever.
You want me to give you an example of what the PMI will cost?
Well, what would make more sense in a situation like if you're buying a house with this and then, you know.
Shit, we should have had something on the screen so they can see it though.
Yeah, I think that would kind of help to see like what would make more sense if you're looking at, you know, whatever deal it is.
Yeah, I mean, again, it's just all numbers.
Yeah.
You know what I'm saying? So like, if you're, look, PMI is not the devil. First things first. PMI is not the devil. It helped you get into a home when you didn't have 20% down. So, and I say this all the time, it's just not the devil.
Can you avoid it? Is there any way you can avoid that?
PMI, yeah, put 20% down. Or you can go to a program like, again, if you're doing a VA loan, it's no PMI. If you do a USDA loan, it's no PMI. Navy Federal has a program. You can do low down payments with no PMI, right? You can do what's called lender paid mortgage insurance. You ever heard of that?
No, of course not. I haven't heard that. Why would I hear of that?
I'm just saying.
I just heard about it now, but no, I
so
never heard of
they
it.
have, it's called lender paid mortgage insurance, LPMI, right?
LPMI, okay.
LPMI, right? Lender paid mortgage insurance. And that basically means that the lender is paying the mortgage insurance, right? So that way you, the borrower, don't have to pay monthly, but you're going to get a much higher rate because the lender ain't doing it for free.
Yeah.
So let's just say, again, in that same example, 6.5%, let's just say you got a 740 credit score, but if you wanted to go with the lender paid option, your rate might be 7.5. It might be 7.75. So now you got to look at, does it make sense
Does it
for me
make
to
sense?
have PMI or have the higher payment
Right.
or the higher rate, I should say. You can pay for your PMI with and this is only conventional loans you can do LPMI with. You can't do that with FHA. You can do a upfront PMI where you pay your PMI upfront at closing. That way you don't have a monthly, but that might cost you 2% of your loan, 2.5% of your loan, right? You can or you can get a seller's concession and use the seller's concession to buy out your PMI upfront.
Okay. That sounds okay.
So you can do that too, and I wouldn't do that. I would just use that sales concession to buy down my rate.
Right.
You know what I'm saying? But there are ways to, quote unquote, try to avoid PMI. Like back in the day, we used to do like what was called 80-20 loans or 80-15. Basically, that's a first and a second. You borrow one loan at 80% of the value, and you borrow the second loan, you get a second mortgage at 15%.
Yeah.
Right? And then you only put down 5. So we would break the loan up so that way you wouldn't have to pay the PMI. 80-20s, 80-15s, those are very popular back in the day. Very popular. But again, you have 2 mortgages now. Now you got to even do that. You got to look at the blend. What is your payment looking like compared to breaking it up versus having a loan with PMI?
What about, so you said for FHA, it's MIP?
MIP, mortgage insurance premium.
Is it like the same thing when you're trying to avoid paying that too, or you have to no matter what when it comes to FHA?
Say that again?
Like MIP, do you have to pay that, like if you have less than 20% down, or that's only for
So FHA, you're going to have the MIP regardless.
Regardless. Okay.
How much you put down. You can put down 20%. You're going to have MIP for 10 years.
No matter,
so if you put down more than 10% on the FHA loan, you're going to have MIP for 10 years, and year 11 it goes away. If you put down less than 10% on FHA, the MIP is for the life of the loan.
Got you.
So if you put down 50%, you're using FHA, you're going to have that mortgage insurance premium.
And
you're going to have an upfront mortgage insurance premium, which is basically a charge that FHA is charging you for even doing this loan. That's 1.75% of the loan amount, but that gets financed into your loan.
What is a percentage for insurance PMI on a conventional loan?
So for FHA, the MIP factor is 0.85% of the loan. 0.85. For conventional, it varies on numerous different things. LTV, credit score, property type. So there's a few different things that can factor into what that PMI company will charge you. Now, there's multiple different PMI companies. So from a lender standpoint, we put into our system, and then we'll get 4 or 5 quotes for that borrower scenario of what the PMI would be. And it could be anywhere from 0.5 point of the loan amount to I've seen some as high as 1.5 because it was just a low credit score, high LTV. It was very risky, so they're going to charge more.
So you said 1.5%
of the loan.
Yeah, that's.
Yeah, it could get expensive. PMI can get expensive. There's no doubt about it. The higher the loan amount, the more it's going to cost you on a monthly basis to pay it. You know what I'm saying? But still got to look at the numbers. Either you pay this monthly or put up 20%. Pick your poison.
Right. So do you think that, is this something that normally a lot of first-time home buyers like have the issue with, is if they should do FHA or conventional, or is it something that, like, you know, because I feel like for me, I just have that in my head, FHA as a first-time, home buyer.
Say that again.
I'm not going to think about.
What was the question?
Is that something that, like, FHA versus conventional, is this like always an issue? Well, not an issue, but like it's something that people who are trying to get into a house think about, or is something that's always presented when they go to like a broker or a loan officer? Because like people want obviously the best. You want to keep their money the most, so I would assume FHA is the best option. But like you said the other day, depends on the factors. So
people look at FHA like the devil itself.
Really?
Yeah. So the real estate world, if you're putting in an offer on a house and a real estate broker or the sellers have to choose between the FHA and the conventional loan, and the terms are kind of the same, they're gonna go with the conventional loan probably faster than the FHA loan.
Why is that? Because
FHA has a negative connotation surrounding it, that it's a little bit more difficult to get done. the appraisal requirements, because you can't have any health or safety issues. You can't have peel and paint. You got to have handrails and stuff like that. So sometimes if the sellers don't want to fix it and things of that nature, then the realtors know, like, this house won't pass FHA.
Right.
So it could be more of a headache, where conventional, you don't need none of that shit. It doesn't matter.
And you also don't have to live in the house either, right?
If you're structuring it as an investment property, correct.
If you're structuring it as an investment property?
Yeah, so conventional, you can do 2 types of structures, right? 3. Primary residence, second home, or vacation home, investment property.
Okay.
So when you come to me, and this is why you got to be intentional, guys.
I didn't even know that.
When you're talking to a loan officer,
Yeah.
That's why I was telling you, watch your language. Words are important.
Right.
Right? So if you go to the people and say, hey, banker, I want to buy this investment property and put 5% down, they're going to look at you like you nuts. Like, no. But if you say, hey, I'm looking to buy a multifamily, which I plan on occupying one of the units, it's a different conversation. Words are important. You know what I'm saying? So, yeah, you can do that all day long.
Would that be like an Airbnb situation, like a second home?
So if you're doing a second home, you can buy it as an Airbnb, second home, use it as an Airbnb, because you're not obligated to live in that house, because it's a second home.
Well, now what happens if you say you're going to live in it and you don't? If you're doing a conventional kind of situation, like if it's...
Is it a house you're going to live in? No. You said if you say you're going to live in, but you don't.
Well, out of the 3 options you said, in terms of
if you're not going to live in a house, it's an investment property.
Okay, so it's an investment property if you're not going to live in it, of course.
Or it could be a second home. So you're in New York, you want to go buy something in Florida. I'm not going to live there. I want to go buy this condo. Now, mind you, with second homes, you can only do single families and condos. You can't do multifamilies with a second home. Oh. And the minimum down payment is 10% for a second home. So when you're doing a second home structure, if I want to buy a condo in Brickell, you know we love Brickell, right?
Yeah.
As much as we go to Miami. I'll do it as a second home. I'll put 10% down. And when I'm not there, I'm just going to Airbnb it. And then when I'm there, I'm going to be in my condo.
No, that's legal, right?
Yeah, that's legal. It's a second home. It's a vacation home.
Okay. I'm talking about for conventional,
I could buy a second. I could.
Yeah. Okay. Just want to make sure.
FHA is only one structure, primary residence.
Right.
Nothing else is allowed.
Yeah. No, but I'm saying because there's no way to like be illegal with that kind of situation.
Nah, that's perfectly
with the
fine.
Conventional.
Yeah, because again, when you're filling out a loan application, right, for a mortgage, a 1003. A 1003 is a loan application, right? You're filling that out. You're signing that everything you're doing here is legit. You're not trying to commit fraud.
Yeah.
So if you say primary residence and your whole application says primary residence, but you know you're trying to hack the system, you can go to jail.
Okay.
It's called fraud. You know what I'm saying? But if I go in here in this application and I say, yo, I'm buying this house in Miami, second home. But you know what? I'm going to buy another one in Cali too, second home. I travel all of these places. They're my second homes.
Yeah.
They're my vacation homes. So I can buy one in Cali, I can buy one in Miami and treat it as a second home, 10% down, and won't have no issues.
So is there anything that has to be done differently now because if it's a second home, does anything change in terms of insurance or PMI or anything like that?
PMI or conventional, because again, you'll get hit a little bit more because it's a second home, right? So it might be a little bit more expensive than a primary. Interest rate wise, the second home interest rate will be on par with the primary, maybe an eighth of a coin. So if you got the 740 score, 10% down, primary residence maybe 6.5 today.
Yeah.
Second home might be 6.75.
Okay.
You know what I'm saying? So it's not being treated like an investment property. Where an investment property, that shit would probably be almost 8%.
But that's what I was trying to ask before. Like, let's say you want to get the best interest rate on a conventional loan, and you're doing can you? I guess it's still kind of like the same thing then, technically, because you want to get the best rate, right? So investment property you're gonna have more interest rate on that, right? I'm assuming.
Absolutely.
So
you're gonna have a much higher interest rate on investment property.
So why wouldn't you go with another option in terms of like maybe saying it's your second home then instead of saying it's an investment property?
Because most people are not buying. You can't buy a multifamily as a second home. So if I'm buying a multifamily, it's either a primary or investment. It's no in between. There's no gray.
Got you.
It's no gray. It's primary, investment. Period.
Gotcha. Okay. Makes sense.
You buying a single family or a condo, it could be primary, second home, or investment. What is your intent?
What if you're like renting out the basement? Then you can, is that like, you could do that, right?
We don't need to know that.
Now, this is, I don't know if this is on topic or not, but like, let's say if you're renting out the basement and you're using that money to kind of pay your mortgage or whatever it is that technically considered income? Can you use that?
No, it's a basement. It's illegal.
Okay.
So your basement is an illegal apartment, right? It's weird in New York. This is what every basement in Queens probably is rented out. You know what I'm saying? Like, but it is what it is. But from a banking perspective, we're not going to use that rental income that you're getting from your basement to help you qualify. No. Now, if you buy a single family that has an ADU, accessory dwelling unit.
What is considered an ADU?
Like ADU is an accessory dwelling unit. It could be, typically an ADU is a structure on your property detached from the main house. A garage, and it's usually around 700 to 1,200 square feet in size, and you use that accessory dwelling unit. And like in New York, we call them like mother-daughters, right? You ever heard of the term mother-daughter house?
Heard of it, don't really know the.
So it's basically like a mother-daughter house. It's like you have the main portion is for the family, and the mother-in-law, or you know what I mean, has their own section of the house too, their own kitchen and everything like that too, right? Those can be legal ADUs as well, right? So you have this ADU. Now conventional will allow you to use the ADU income if you're filing it on your taxes as rental income to help you qualify for that ADU. You even have like Fannie Mae home style loans, which is a rehab loan, the conventional rehab loan, where you can get the rehab money to help you build out your ADU.
Yeah, I was gonna say like if you
maybe we need to do a video on home style because we did 203K. Maybe we need to do one on Fannie Mae home style because that's the conventional 203K, and you can do investment properties with that one too.
Yeah, we should definitely. We probably.
Maybe I'll talk about that in the webinar this weekend. This on Wednesday. Yeah, I think I'm gonna talk about that in the webinar. Let me talk to my realtors about that on the webinar.
Okay.
Shout out to Brandon with the super chat. Appreciate you.
So with the income from, so you can't use that as income, right? So when it comes to basements, like there's no way you can make it legal to have people living in there, or it's just always gonna be.
You got to go through whatever town that you live in to get your thing permitted and everything for it.
Okay.
So yeah, there's a process that you can try to legalize stuff, but most people ain't trying to do that. They're just trying to rent out their basement to make some money.
But I'm thinking about it like, all right, well, what if I just want to have that as income so I can, you know what I'm saying?
Do whatever you want.
So it is possible. Okay.
Just don't get caught with a bad tenant.
Yeah.
How you gonna kick them out?
Yeah, but then that's the same situation if you have any other property, no?
Yeah, but at least you have all right, so there's professional tenants in this world.
Okay.
Right? If they know your basement is illegal, now they can create a living hell for your life.
Oh, yeah.
They can call 311, like in New York, 311, and then now they can call and complain. Like, yo, I'm living in this basement, it's cold, this guy ain't fixing the heat, blah, 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 and now you got the town all in your business.
Yeah. Yeah, that makes sense. You don't want that. Definitely don't want that headache. For sure.
It's a lot of headache. I mean, that could happen with that happens, now you got a whole nother other can of worms because you probably you didn't get nothing permitted. You got legal bathrooms down here. You got stoves in your joint. You know what I mean? Gas running through it. Like, what's going on here? Ish happens, bro. Ish happens. So you just got to be mindful of that thing. So yeah, but people do rent out their basements. I know people who buy single family homes and live in the basement and just rent out the house part. Right? That's another way of house hacking too. So if you're someone who's single, right, and you don't need all of this space, and you buy a single family, why not Airbnb it? Why not rent it out and you just go live in your basement? I know plenty of people who've done that. And that helped them create their wealth. Shit, Doug Depp, shout out to Doug, he tells this story all the time. He lived in his first house. He was living in the garage and renting out all the rooms. He made the garage like his bedroom.
I mean, you could have a dope setup in the garage, though.
Nah, 100%. 400 square feet is a big, if you got a 2-car garage or something like that, it's like 400 plus square feet for the most part.
Yeah.
Think about it, that's a huge master bedroom.
No, that's a fact. Okay. So, I mean, I think that pretty much answered the question. I mean, I'm sure there's other factors, right? But that seems pretty, like, solid information. I've been seeing some of the comments too as we were going along. I wish I would have asked them to you before, but I guess I can ask you now.
Yeah, go ahead. How long we been on this for?
25 minutes.
Yeah, we ain't got enough likes, y'all. We need y'all to go like this video, man. Make sure y'all like this video and make sure y'all click the link. Click the link. We got the webinar on Wednesday and Thursday, 2-day webinar. Go to mgbookstore.com. Get your tickets now.
So somebody asked if you inherit property, can you FHA?
It's inherited property. Why would you need a loan if you inherited it?
Not sure.
Are you trying to refinance out of it? You know what I'm saying? So if I inherit property from a family member, right? It's either free and clear or it already has debt already on it.
Right.
So if it already has debt on it, shit, the bank ain't gonna care as long as they're getting paid for the most part.
Yeah.
You know what I'm saying? It's just the ownership structure would change. Now, some banks might say, hey, you got to refinance out of it and put in your name. Then that's when you have to decide what program will be best for you. But for the most part, if it's a free and clear inherited home, unless you're just trying to pull money out of it so you can rehab it or whatever the case may be, it's the same philosophy. You just got to see which loan product is best for you. If it's a primary and you have low credit, high DTI, maybe FHA. If it's not a primary, or even if it's a primary, you got high credit, low DTI, might be more advantageous to go conventional. If it's going to be an investment property, conventional. You know what I'm saying? And you figure it out from there.
Ball's in your court. Okay.
The ball is in your court, ladies and gentlemen. The ball is in your court. Make sure y'all like this video. We need more likes.
So somebody asked, now, if you're a first-time home buyer and have a credit score in the 790s and want to purchase a 2-family dwelling, which loan will better serve you? What is a two-family dwelling?
A 2-family. A duplex.
But what is dwelling? Like, what is that?
Dwelling is the house.
Oh, okay.
Yeah.
I hear that. I've seen that a lot. I'm like, what is that even?
Yeah, it's just a house. It's just a building.
So why can't you just say 2-family house?
Because some people like to use technical terms. That's all. It's not. Don't read too much into it. It's not that important.
Yeah.
The word dwelling don't mean nothing.
I was like, what does that mean?
Yeah,
like,
yeah,
okay.
nah. It don't dwelling. It means nothing. It's a 2-family. It's a 3-family. Some people say in New York we say 2 families. Other places say duplex. We say 3 families. They say tries. We say 4 families. They say quads. You know what I'm saying? It's all the same shit at the end of the day.
Okay.
Now, what was their question?
Which one would better serve you?
If they want to buy a duplex,
They have a score in the 790s and want to purchase it.
down payment DTI. If you want to purchase it as a primary residence and you got the 20% for conventional, go conventional, right? Me personally, I'm OPM. I'm gonna go FHA, especially if it's gonna be my primary, because I don't want to put down 20%. I'll just pay the PMI, and I'll take that other 15, 16, 17% that I'm saving, and I'll use that to go run another play and go buy another property.
Have you done a conventional loan?
For myself?
Yes.
All my loans are conventional.
I don't want to get...
Well, so all my loans are conventional or in LLCs.
So you don't really have too many FHA loans then?
I have no FHA loans.
Have you used an FHA loan to refinance out of it?
No, I don't need to.
Oh, so you just do conventional.
Yeah.
It sounds like it's more of like a people with money kind of situation. If you got your credit high and all this stuff and like.
So when I bought my first house, we didn't need FHA. I remember I'm old, bro. I've been doing this for 20 years, bro. Like when I bought my first house, like it was no house hackonomics. You could go get 5 loans today from 5 different banks. I was in the wild cowboy days.
Yeah,
you get a post, you get a loan.
Yeah.
So FHA was around. Full doc conventional loans were around, but I'm doing stated income. I'm not going through all that paperwork when I could just do a no income loan, a no doc, a no ratio, a negative amortization. I did all types of loans for myself, right? But now when you're in this world, I buy real estate, I'm doing either conventional or it's in the LLC name. And so the mortgages that's in my personal name, yeah, all of them, all conventional, all with low interest rates.
With low interest rates?
Yeah, all of my rates, except for one, is below 3%. And the one of the investment properties that's in my personal name, I think that one is 3.75. I don't remember, one of them.
Oh, so you just chilling. Did you take advantage during COVID?
100%.
Oh, okay.
This is what I'm trying to tell you. I brought Garland Gardens in during COVID. You know what I'm saying?
Yeah.
Like, what I pay for the house, $900,000. I'm not a fool. I saw, okay, that's my dream area. I've manifested that house and being in that area.
Yeah.
So when the rates were dipping what they was, I said, oh shit, I can go borrow $1 million for cheap. So I found something, $900K, and I put down 10%. I have PMI on that house.
And equity, I'm assuming a lot more than
A couple $100,000.
yeah.
And when it's done, it's gonna be a couple more $100,000. And then I'm gonna call them up and say, hey guys, time to remove my PMI of $600 a month.
So now this is your dream home, right? So like
No, it's not my dream
It's not your
house.
dream home, but it's like, you know.
It was my dream area because coming from Queens, and when I used to go out there, my man Papa, shout out to Big Papa, how I learned how to drive. I tell you, story time, ladies and gentlemen. Please get your, please. This is story time. We're gonna tell a little story so you have a little understanding of MG. So my man Papa, Big Papa, right? Shout out to Papa, love you, bro. He used to go out there all the time. He had a little joint out there. So I probably was like 16 at this time. So he used to make me go with him because he's fucking lazy sometimes. He just don't want to drive. So how I learned how to drive, ladies and gentlemen, he used to be behind the driver's wheel, but I would be in the shotgun holding the wheel on the highway.
That sounds
Switching,
dangerous.
switch in the Sentra at that.
Oh, okay.
I'm talking about, this is 1994, bro.
Oh, yeah, it's 94. Okay.
94, 95.
Yeah.
Yeah, this is like 94. So we used to drive, even my man Dap, Pastor Phil, I should say, right? Same thing. So he used to be in the back seat, or we switch turns, and we'd be in the car like this. And that's how that's why my wheel game is so nice now. Is because I can drive with left or the right, because when I first started learning how to drive, I was in the shotgun seat like this, holding the wheel, switching lanes. That's how Papa taught us how to be nice on the wheel. So we used to go out there, and for me, just seeing all the trees and everything like that, you coming from the hood, you're going like, what the fuck? And you see all these big houses, it's like, what is this place? Where are we, number one?
Yeah.
Is this still New York? And how is this New York? And I've never even heard of this before. You know the area, like you go over there, it's like it's crazy. So in my mind, I always manifested that. And even when, I can remember it was 10 years ago, I used to take my kids out there with me to open houses. And I would go out there, take them to open houses with me, and I'm like, yo, we're going to have one of these one day. And they used to get so mad at me. Like, we got to go to another one out there. We ain't got, Dad, we don't want to go. I'm like, no. I'm telling you, we're going to go out there and we're going to get this thing one day. I'm telling you, I'm going to get something out here like this. And now I have it. So when I saw that opportunity, I said, oh, money is so cheap. I got to go get this now.
Yeah.
I got to do it. And I found Garland Gardens. Although she's a pain in my ass right now, I haven't even lived in that shit. But it was like, all right, I'm doing this. And the money is cheap, it's a no-brainer. And I put 10% down. I could have put down 20, but why? I need that money to fix it.
Can you do like a loan to fix it?
Yeah.
But even on a house like that, because you were doing things
I could have did a construction loan at the time. I can probably do a HELOC right now, right? But
with the equity that you have.
Yeah, but I'm not. Everything's out of my pocket, which I'm normally against. I'm normally against it. And hindsight 2020, what I know now, if I knew then, I probably would have just did everything in a loan, right? Because the money was still cheap, even if I did the loan. But the problem that I had is that I didn't really know what I wanted to do with the house, and I didn't want to be behind the 8 ball with the loans, because you only have a certain period of time to do your work.
Oh,
And
I see.
I didn't really know that I want to make the mansion, that I wanted to keep it the 1 story how I'm doing it right now, just blow it out more. And I went back and forth, and because of my home life situation too, it's like, you know that, right? So I was going through a lot of back and forth. So I was like, you know what? I don't really know, and I really don't want to rush this, because the mansion was going to be my dream house. So I wanted to take my time. I wanted to hire a designer. I wanted to really you see the renderings and shit like that. So I really wanted to take my time and not rush it. So I made the decision, it's just, I'm gonna pay for this out of pocket. And another reason why I didn't really want to have a $1.4 million loan.
Yeah.
Either. I didn't want to have a $12,000 payment at the same time. Yes.
Monthly?
Yeah.
Yeah, that's crazy.
I mean, I still pay a lot now.
Yeah, but 12 bands a month, that's insane.
Yeah, I mean, because the taxes over there, the taxes are ridiculous.
And that's only on a 1.3 million.
It's the taxes, bro. So again, no, I'm saying 12,000 after it was completed.
Oh, okay.
Right. So if I'd have took out the construction loan, honestly, it would have been closer to 2 million, because I would have needed $1 million, 1.3 million to be exact, to build the mansion.
So you're paying your loan and the taxes on top of that.
No, so you paying. So if I borrow, the construction loan, you got the acquisition money, right, which is the $900K, which is to buy the house. And then if I'm doing a construction loan on top of it, if the construction cost was 1.3 million, let's just say,
okay,
now it's 1.3 plus 900, so that's damn near 2.2 million.
Right.
Then my down payment and everything would be based off that 2.2 million, not the 900. So then I would have had to put down like 500,000-600,000, and then now I'm still borrowing like 1.8, some shit like that. And when the house is done, my taxes are going to go even higher. My taxes is like 28,000 right now, as is.
28K.
Yes.
Oh man, it's overwhelming. I'm just trying to get my first crib.
But if I'd have did the mansion, the taxes went to like 40 something.
And it's funny because people in that area pay that all the time.
All the time.
And it's normal.
It's actually pretty normal over there. It's not normal. Like, hold on.
No, they just chilling though. It's like, yo,
yeah, but you gotta say that a certain way.
Well, I mean, I'm not living in a house like that, nowhere near. So
I know, but the audience, you gotta put it into perspective. Like,
oh, well, I'm just saying, for them, it's probably
for Long Island, that's normal.
Yeah,
we gotta put it into perspective, because some people around, if you hear these numbers, you're like, what the hell? But this is Long Island, New York we're talking about.
Yeah.
In a very prestigious neighborhood. You know what I'm saying? So it's going to be more expensive than a regular house in a different area. You know what I'm saying? You got regular houses in fucking regular neighborhoods in New York, in Long Island. That's 20,000, 18,000 a year. So imagine this area. You know what I mean? So that's another reason. I say, you know what? If I'm going to spend on a down payment closing cost, 600,000, 650, I might as well keep my debt low. Like right now in the house, I think I owe like 700 and some change on it.
You owe 700 right now?
Yeah.
That's after your down payment and everything.
Yeah.
That's not bad though.
I only put 90,000 down. 10%. So I borrowed 810 when I first closed. But I've had it for next month will be 2 years. I had that house, bro. So I've been paying it down for 2 years.
So Jordana got her crib for the same price you did?
Pretty much, somewhere in that same. No, I think she paid like 7, but hers is worth like 9 something now.
Yours isn't worth 9?
No, mine's worth a lot more than mine's worth over $1 million. This guy,
damn,
this guy. You see these questions he's asking me today, yo, what you trying to do to me on here, bro?
Nah,
come on, man.
Nah, I'm trying to get the numbers in my head. That's all. That's crazy.
Yeah, it's over. Right now, it's over $1 million.
And you only put down 90,000?
That's what I'm trying to tell you. OPM, brother.
90K is not. People could definitely.
I spent with down payment and closing costs probably 115,000 with down payment and closing costs, and that house has like 300 in equity right now. I'm not talking about from what I owe to what it's worth right now. I'm talking about for what I paid for it.
Right.
to what it's worth currently as is
I know.
in the current state
Yeah.
of a piece of shit.
Before it's even like finalized and done and everything, right?
Once it's done, you might as well add another. And then now, so my thought process behind this, and the whole reason for this conversation is to show you PMI is not the devil.
Yeah, yeah.
Right? My PMI payment, matter of fact, I'll tell you right now. Who's got this mortgage?
That's crazy. 90K for that crib, and then you got to think about like, all right, let's see, even if I had 90K, I still got to make that money every month.
Let me see.
Like in order to be able to pay.
How much is my PMI?
Whatever you paying every single month. It's probably like 6 bands a month.
Well, for my mortgage?
I'm saying it's probably somewhere around that. No.
Yeah, my mortgage is more than that.
Yeah, nah. See,
All
that's
right,
crazy.
so look.
But if you're making it, then more power to you.
All right. So you can't see this. Is my address on here anywhere?
Nah, you don't have to show. You could just say.
So, but hold on. You can see it though.
Yeah.
You see the equity number?
The green or
The green.
That's equity.
Yes.
Okay. So pull that out. What's up? What we doing? What we gotta do right now?
So all right. So that's that.
We're
Right?
about to go to the club tonight.
No, I've done enough of that. I'm done. All right. I'm trying to tell you what the hell's the PMI, because I'm trying to make a point here. All right. Escrow.
And you said you put down 10%, right?
Yeah.
On it's a conventional.
Conventional.
Okay.
Why can't I see my PMI? Oh, statements.
This is a single family, correct?
Correct.
Yes, single family. It is a single family.
Let me see. So my PMI, fucking taxes, oh my God. Where's the PMI? Lender pay, da-da-da. All right, hold on, where's the breakdown? All right, so my PMI right now is $586 a month.
586.
586, 586.95 is my PMI.
Is that even like a lot of money though, considering what you're paying anyways?
No, so look, let's do the math. This is what I'm trying to tell you, right? So you got 586. I had it for 2 years.
Okay.
So that's 24 months. So that's $14,064 that I've paid in PMI over the past 2 years since I owned this house, right? Now, I paid $900 for this house. If I were to put down 20%, that's $180,000 I would have had to come out of my pocket plus closing costs. So I would have spent another $25,000 on closing. So you understand where I'm going with this? Why I say PMI is not the devil, ladies and gentlemen? I'm using my own thing as an example here.
Right.
So if the PMI is only 586 for 24 months, that's only $14,000. So I decided to do 10% down, 90,000, right? So even if you add that 2 years I've been paying PMI, 14,000, the 90,000 down payment, the closing costs, call it 25,000. That's $129,000 that I spent with the PMI, the down payment, the closing costs, versus me doing 20% down. That's 180,000 plus 25,000. That's 205. So take away 129.
Yeah, what's the difference between the two?
So that's $76,000 that I got to keep in my pocket, and plus PMI is tax deductible.
Yeah, and okay.
So why do I care about the PMI?
Right.
If I can afford it? Why would I go out here and put 20% down when I don't need to? Because right now the house already has enough equity, way more than 20% equity in the home for me to remove the PMI.
Right.
But I'm not going to do any of that until the house is completed. And then now I call and I have a much higher valuation compared to what I owe. And now I get that PMI removed, and I still have a gang of equity in my house. So now what my play might be is if I really want to, after I do everything's finished, I might do a line of credit and probably pull out $800,000-900,000 and have that money sitting on the sideline for opportunities that might or might not come. Who knows?
So now my only question with this is like, don't people just put down more money to avoid having to pay or have more debt? Because that's like the biggest thing is like people want to put down as much money as possible, and I guess in rare cases to kind of just have less debt, you know, or it's
Well,
like
that's why I didn't do a construction loan. Because if I'd have did the construction loan, right? Again, I would have needed at least $1 million. I paid 9, that's 1.9. You know what I'm saying?
yeah,
So if I'd have did that, let's just call it $2 million even. And now I got to put down 20% plus closing. So now that's 400,000. So now I'm borrowing 1.6. So now with a 1.6 payment, a 1.6 debt, right? Plus these taxes going to go, and that's if I did the mansion. I do the mansion, my taxes go up to $4,000, 40,000, 45,000, right? The principal and interest payment. Now I'm sitting here talking about $11,000, $12,000 a month. Even with a dirt cheap rate, I'm still talking $11,000, $12,000 a month. So for me, I said, what am I more comfortable with? For me, again, don't be house rich and cash poor. Rule number 1. I always say this. I have to live by that same example.
right,
What do I feel comfortable with? I feel comfortable with, I pay $6,400 a month for this house,
okay,
right? I like $6,400 versus $12,000 any day of the week.
yeah. I mean, I would too. But
Because if shit hits the fan, I know I can come up with $6,400 every single month.
for how long is this loan for?
This is a 30-year mortgage.
So it would have been 30 years either way, whether you're paying.
Either which way.
12,000. Yeah. So I mean,
But
who
I'm
would
not
wanna
going to
pay-
stay in this loan for 30 years.
Well, I'm saying, but like, who would want to pay 12,000 versus this?
But that's what I'm
6,000?
saying.
Yeah.
So it saves me $6,000 a month. It makes me more comfortable, right? Now, am I happy with the amount of money I'm spending out of my pocket right now? No.
Because the house isn't done, right? So of
It's
course,
only because the house ain't done and I've been going through the motions and the struggle with it. But I know I'm almost there. So I just got to be patient for this year. Let me run my plays. Let me do everything I'm doing. Before I know it, it'll be Christmas.
yeah.
And then I'll be in my house. And then all of that will be well worth it. And I know whatever money I put into it, I can get it all back out dollar for dollar. Know why? Rule number 2, always have an exit. I have an exit,
Right.
which is the refinance, the home equity. I won't refinance it. I'll do a home equity line of credit because I know my house is going to be worth a lot more than what it is today.
In that line of credit, you have that money just sitting there? Or
So
you have
I'll
to-
take the line of credit out. It'll be a second mortgage, a home equity line of credit. And now I'll have the monies that I basically put in the house, I'll have it all right back.
But it's a line. Well, it's
It's a line of credit. So now if I use it, I have a payment, obviously, right?
based on however much you're.
However much I use.
Right.
But if I'm going to use that bad boy to now, either I'm going to say I'm going to keep this on the sidelines or I'm going to deploy this capital into something that now is going to pay for this whole entire house.
But you say sidelines though. Don't you have to use it within a certain time?
No.
No.
No, you got 10 years to draw from it. So if I pull out 800,000, I can now have this 800,000 as line of credit sitting. It's basically money in the bank, basically.
And you could use that for whatever you want.
Yeah, I could go fucking buy a Ferrari.
With equity from a crib.
Yeah. I could
People
do
do. Do people do this?
Yeah,
Yo, that's crazy.
I could go buy a Ferrari.
I thought it was just for the house only. Like you have to put the money back into the crib. Like
No, I can go buy a fucking Phantom if I wanted. I could go to Dubai for a month. Like,
Wow.
I could do whatever I want.
so, is there anything? But then you still got it. It's not
You
like-
got to make a payment on it. It's a debt
yeah,
still. It's
yeah.
still debt. Let's not get
Right.
it twisted.
Are the rates high for what you got to pay back?
Yeah, it's gonna be because the market's higher right now, so it's gonna be a higher interest rate. That's why I
Yeah.
said I'm gonna just do the line of credit so I have the money back. That way now, if I need the money for a play, I'm basically just reusing the money that I already just spent.
Right.
So I just recycled my own money.
Yeah. Yeah.
You know what I'm saying?
Damn,
Yeah.
that's dope.
Well, it's called strategy.
Yeah, but I feel like you have to have a business plan in place. So you can't just be like running.
Well,
around
you
if don't
can't
have
be
one.
out here like a fucking chicken with your head cut off, just trying to be out here and just going like, hey, I'm gonna go buy some real estate and
No,
do
that's
shit.
dangerous. Dangerous.
But this, what do I
dangerous.
always talk about though? I always say, yo, if you don't know what the hell you're doing, you need to sit here and educate yourself and learn what the hell you got to do.
Yeah.
Rule number 1, don't be house rich and cash poor. Rule number 2, have an exit strategy.
Right.
I just gave y'all a real life example. I don't even know how we got on this topic, by the way. But
Somebody asked a question about something about
a PMI, yeah.
yeah.
But this is what it's all about. You know what I'm saying? Like, so now I take this money, I get 800K in my hand. Now I can go out here. I can go buy a building. Like what I'm probably gonna wind up doing is go buy probably a 50 or 100 unit building,
Yeah.
and get enough cash flow out of that, net cash flow, to pay for my house and the line of
Yeah,
credit.
that'd be a smart thing to do. So you don't have to worry about the house.
I don't have to worry about nothing.
Yeah.
And then I'm gonna buy that smart, and I'm gonna refi that shit out and get my money back out that I put back in. And now I'm just playing with the same money over and over and over and over again.
Yeah.
So in all honesty, that's why I said I'm gonna sit it on the sideline and wait for an opportunity that might or might not come. But something will come across my desk by this time next year when I'll have that $800,000 just sitting on the sidelines, and there will be a big enough deal to where now Garland Gardens will be free for me.
That's the play. I have to watch this back. Somebody's saying
House hackonomics, ladies and gentlemen. House hackonomics. There's many ways to house hack and build wealth with real estate.
I gotta read the book. I haven't read it yet. But somebody's saying, so Will is saying something isn't right about your house deal, right?
What?
Will is saying something isn't right about your house situation, like your loan, how you have it set up. If you put 120 on a house, you should not pay PMR. Oh wait, maybe that was. Yeah, somebody said that's way too much money for a single family. I'd rather buy a 2 or 3 family. This is the same person. And he also asked if we have a call-in. We don't have a call-in number yet.
Let me answer this question first of all. I don't care what y'all would do. Like, first of all, let me explain something to you. I am established, okay? I am 20 years in this business. I have multifamilies. I'm going to buy. You can go out and buy on whatever you want to buy with your money. I'm going to buy whatever the hell I want. And that's why you asked me if this is my dream house. No, because I think my dream house is, I need to spend like $5 million on it. That might happen.
That's a lot, yeah.
Yeah, but that's when you say my dream house, like, yeah. But everybody got to play at their own level.
What I'm trying to understand is what they're saying. So you should not be paying PMI if you put 120K a month.
They don't know what they're talking about. They're in the back of the class right now. What are they talking about?
I don't know. I'm trying to understand so I can learn for myself why, like.
But you got to be careful with the comments though, because some people just be sitting there talking. They don't know what they're talking about.
I don't know.
How you going to? It's simple math. It don't matter the dollar amount you put.
Right.
It's the percentage. So if you buy a house, you put 10% down, you go conventional, you're gonna have PMI. It's simple.
Unless you put 20% down.
Unless you put down 20%. I gave the example.
Right.
Why would I put $180,000 down when I could put half of that down? Because I know what my play was. I didn't buy that house to keep it as is.
Right.
I know the comps in the area. I know the area extremely well. I know what's selling over there. And I know the 2 plans that I wanted to design for the house, what they would be potentially worth. Obviously, the mansion would have been double the numbers we're talking about.
Yeah.
So it would have been a bigger play for me. But did I want to take that risk? Sometimes, again, I tell y'all this all the time. Don't bite off more than you can chew. Mm-hmm. I've been dead broke before. I know how it feels. I know how it feels to wake up fucked up. Pockets broke as hell, another loan to sell. Like, I know how it feels. So I'm not going to put myself in a position to where I'm going to stress myself out. So no, I didn't want to take on almost $2 million debt for a single family house that I'm going to live in.
Yeah.
I said to myself, what would be the most advantageous for me and my current lifestyle, how I live? This house is going to be 7,500 square feet as is. I don't need 11,000 and change square foot house for just me.
Yeah.
I'm single. My kids are getting older. Baby boss going to come over whenever she feel. Brooke and Chris going to come over whenever they feel. But Brooke about to go to college. And then Chris is right behind her soon. You know what I'm saying? Then it's only going to be baby boss. Unless I have more children in the future, for me, I say I don't really need 11,575 square feet house on Garland Gardens. I'll just make it 7,500 square feet. I think that's big enough. That's huge.
That's a lot of space.
You see how big this house is? As is right now, this shit is 6,000 square feet.
A lot of land.
This shit is humongous. Like, even that house how it is now, it's like, yo, this house is big. Like, what am I doing? I technically didn't even need to do all the shit that I'm doing right now. Because I said, yo, I've never even lived in a house this big before. And I'm over here adding more to it. On an acre? I'm bugging.
You might be a different person when this house is done. You might be.
No, I might. And here's another exit. I can probably flip this if I wanted to.
Flip this house.
Yeah. Ain't
How would you
nothing
do
off
that?
limits. Sell it.
And you still have.
It's going to be so sexy if I put this thing on the market. Just to say, let me see what the market wants to give me for this. Somebody come with the right number, that shit can go, and I'll
But
get
isn't
all
it
my
gonna
money.
be based on the other homes in the area?
Yeah,
What are the other homes in the area right now? Like one.
one something and higher.
Okay.
Mid
So you-
mid ones and halves and twos and threes.
Yeah. So okay. So you're set either way. So you didn't go into this deal just emotional.
No. Yes. Yo, fuck you, Tooks. Yo, don't get on my
No, I'm
bad
just
side
saying,
today, bro.
Look, you still got equity. You got plays. You got 2 exit strategies. So
Yes,
you're
I
good.
was emotional.
Yeah, you're emotional, but
Yes.
you wasn't. All right, so maybe
But
not emotional. You weren't
I wasn't
stupid.
an emotional home buyer, no.
Yeah, okay.
Emotional, yeah, emotional, yes. But emotional home buyer, no. Right? I went in there with a plan of action.
Okay.
And that's what I try to preach to you guys who watch my channel.
Yeah.
Go into these things with a plan of action. You are a CEO of a real estate business. This is a real estate transaction. Treat it as such. I knew the house, I see the footprint, I see how it looks. I said, damn, I got a vision for this. This house is a piece of shit. You've been in this house.
Yeah.
Even when it was regular, before I gutted it and everything, you saw what it looked like.
Yeah.
It was built in 82. One owner, one family. I love the bones. There was good energy from them. I love the way the house sits. I love the estate feel to it. I said, oh shit, I can make something out of this. And I can make a mansion here. Or I can just blow this out and make this like some California love type shit because of all the trees and the greenery around. And that's why it's Garland Gardens.
Yeah.
I said, yo, I can freak this. Then I did my research. Like, oh shit. And then the numbers, even from 2 years ago, are higher
Yeah.
than it was. So I'm like, either which way, I got to play here. I can afford it. I'm going to do it.
Would it have ever made sense for you to do an FHA on a house like that?
No, not for me.
Could you have done an FHA loan on that house?
Yes.
Now, if you've done an FHA loan on that house with the condition it's in, it's not really livable. So how would you be able to?
When I
live in
bought
it?
the house, it was livable.
So what if it wasn't? What if it was in the state it's in right now?
No,
You would not be able to do an FHA loan,
No,
basically.
not in the state because it's no kitchen, there's no bathrooms, it's to the studs right now.
Yeah, so the house has to be livable, basically.
Yeah.
Okay, so they have. So how do they approve? They have an inspector come out and.
Yeah, you have
check
an appraisal come out.
Okay.
So when I purchased the house, I could have got an FHA loan on that house, but why would I need to? Again, understanding your loan products,
Yeah.
ladies and gentlemen.
Right.
If I put down 10%, how long is my PMI? My PMI would be for 10 years. Don't care if I got a 2.25% interest rate because that's what the FHA rates were at that time. And
Yeah.
I thought about it. But I said, yo, I don't want to stay in this loan for 10 years and pay PMI for 10 years when I know I'm going to be up $1 million in equity.
Right.
So fuck this shit. I'll go conventional. I'll take a 2.875%, no problem. It's 2.25%, 2.8%, tomato, nigga. It don't matter to me. It's a couple dollars here or there. My biggest concern was I'll pay the PMI for 2 to 3 years. Even if and I mapped it out. I said, even if I pay PMI for 3 years, we're talking about $7,000 a year. Even worst case, that's $21,000 of PMI over 3 years. I'm still saving money by putting down 10%. And it's deductible. So I'm going to win either which way on this deal.
Yeah.
I had my exit strategy. I knew exactly what I wanted to do. And even if the market tanks, I'm still good.
Why you say 2 to 3 years though? You keep saying that.
Because when I purchased the house, I didn't have a plan of how I wanted the house yet. So I knew I wanted to take my time. And architectural plans and designs, that take a couple months.
Right.
And that took like 6-7 months by itself. Remember, I had 2 sets of plans drawn up.
Yeah, but you said you didn't want to pay the PMI for.
I said 2 to 3 years max. In my head, I always knew this was going to be at least a 1.5 process to 2 years. But I did a worst
in your head.
in my head. I knew this was going to be 2 years or less.
Right.
I figured year 1 will be planning, designing, and then once we figure it out, get permits real quick. But the town had their own plans. It took almost a year to get permits.
Right.
And even going through the designs, I was back and forth with the designs because I'm like, yo, I don't like this. Change this, change this. And then I got to give them the time to go through it and see it and do everything like that too. So it's a lot that goes on with that. So I had to say, all right, this is how I want to do it. This is what I'm going to do. But I had 2 years, worst case, but then I did a very other worst case of 3 years. So even if and now I'm in that shit. This is the crazy thing. Come next month, I closed on Biggie Day too, March 9th, right? God bless the dead. That was a beautiful day for me. God bless, right? So now I'm going into year 3. So I'm still in my mind with my numbers, I'm still where I said I wanted to be. As far as how long I'm gonna have this PMI for. So before I go into year 4, that PMI will be gone, the house will be finished, I will be living there, and life will be good.
Okay. All right. Copy. I got that. I'm just trying to understand the FHA side of it.
The FHA side didn't make no sense for me.
But I'm saying in terms of like you putting down the same amount, like same to 10%, right? Mm-hmm. Where like you have to pay MIP.
Correct.
Right. So how much of a difference is the MIP as opposed to the PMI?
The difference, I don't care about the monthly difference. So monthly doesn't concern me.
Well, just overall in
it was the
3-year
time.
process.
It wouldn't have been 3 years for PMI because remember, you can't. Only
MIP?
way I can for MIP. The only way I can remove MIP if I do what? Refi. Remember, MIP. If I put 10% down, how long does it stay on for?
If you put 10% down?
Yep. How long is the MIP for?
Life?
10 years.
Oh, 10 years.
It goes year 11.
Conventional if it's 10%, it's
No. FHA, if you put less than 10% down, it's life of the loan.
FHA, but conventional 20.
No, conventional 20% no PMI. Don't confuse yourself. Let's not even talk about no PMI because that's going to confuse you. Let's keep it FHA. Yeah. FHA, 10% down, 10 years, the PMI goes away. The MIP goes away.
If you put
10% or
more,
it goes away year 11.
Okay.
If I put less than 10%, it's for the life. So
that's okay.
And with the rates being low, again, 2.25 was the rate for FHA, 2.875 for conventional at that time. Mm-hmm. I said to myself, these rates ain't never coming back. Yeah. I'm not going to be able to refinance and get out of this FHA and get a lower rate. I knew rates were going to go up.
Right.
So, and I'm not staying in this shit for 10 years to pay PMI for 10 years. I don't care what the monthly number is.
Right.
Because now if I stay in there for, even if it's $600 a month for 10 years, that's $60-something thousand of PMI. I don't want to pay PMI that long. I'm not a fool now.
Right.
I want to use it for my advantage and then get the hell out of it. Conventional gives me that option. I don't never have to refinance this house ever again. I don't have to touch this house with the loan.
So, okay, so let me just, so if you did an FHA, you would have had to refinance out in order to get out of
Correct.
To get the MIP off of the loan?
Correct.
Okay, so with your plan of 2 to 3 year strategy, whatever it was, you figured that, or it made more sense to do conventional because you didn't want to refinance into another deal with this house, right?
Correct.
Got it. Now it makes sense.
This actually goes with the topic of this conversation. Yep. Which one is better, conventional or FHA? This actually flowed very well. A prime living example, courtesy of MG. Which one was better in this situation? Ladies and gentlemen, please, in the comments, what would you have done if you were me? Would you have did an FHA loan to put down 3.5% or do the conventional at 10%? Type in chat FHA or type in chat conventional. I really want to know. We need to be able to put a poll up on this shit.
It's hard to say though because you're putting down less money, but you didn't want
now I have a high payment.
You have a high payment with less money on FHA?
Yeah, because remember, if I put down 90,000. If I put down 3.5, that would have been what, 20,000 or something?
Oh, so that's
so now I'm borrowing more. Right. I'm borrowing 880,000 or whatever.
Right.
860 or whatever.
Yeah.
And now I have a higher payment and I have PMI. That's going to probably be a little bit higher too. Because of the calculation, my PMI.
MIP? Is it MIP. The same thing? Or?
It's just the same thing.
All right. Got you. Okay.
So they're saying conventional. If you can afford it, conventional for sure. Conventional with lower payments. Conventional. Exactly. So that's, when you guys ask the question, to yourself or to me or in the comments, what's better, FHA, conventional? You have to be able to dissect your plan.
Yeah.
First of all, you need to know the shit. You need to
yeah.
know the pros and cons of conventional, the pros and cons of FHA. You need to know your exit strategy out of either one of them. You need to know the comps in the area, what the neighborhoods are projecting. You need to know your shit. You need to know what the hell you're doing, right?
You gotta research.
You have to do your due diligence. If you're doing, like this is kind of like a burr, right? I bought something under market value.
Okay.
I'm rehabbing it.
Right.
And I'm going to HELOC it instead of refinance and pull it out, and I can repeat the process.
That's the burr strategy?
Yeah, basically buy, renovate, refinance, rent, repeat. But I'm just not renting. You know what I'm saying? And
But that's with equity. That whole burr.
The whole burr is to build wealth in real estate. You must force your appreciation. So if I would have just went and my kids is pissed off at me, right? Shout out to my children. They said, yo, because I took them to we call it the Ferrari house because it had a Ferrari in the garage, right? Mm-hmm. Dope ass house, $2.2 million. Dope house. Backyard wasn't as fly as mine's is going to be, but it had a good baseline. Good looking pool, water shit, 50-foot ceilings, fire. They love that house. They say, yo, Dad, why don't you just buy this? And I'm like, I don't want to buy this for $2.2 million because where can it go? I'm at the top of the market, kids. So I had to break this all down to them, which they still really don't. They understand, but they don't care. They're just like, yo, you could have just bought this house already and just lived in it. And we could have just been over here chilling, right?
Yeah, then what?
But for me, I didn't buy that house because I don't want to, if the market corrects itself, if I'm buying at 2.2, then how much more equity can I really get out of this property if the market corrects itself?
Yeah, right.
Not that much.
At the time, when was this?
This was 2 years ago.
Oh, okay.
Right? And what's happening right now? The market is correcting itself.
Right.
Right? So now if I buy this house and I put my sweat equity into it, I'm forcing the appreciation. Again, I just told you, I'm going to have at least $1 million of equity in this house once it's done.
Right.
So now I'm going to be able to go out here and I could pull out $700,000-$800,000. That's true wealth, bro. That's money. That changes life. And then I now take this money and I go buy more assets to now pay for this liability. Because now I'm paying for this out of my pocket. But now I get this. Mm-hmm. I replenish myself if I want to. Or I deploy it all into another asset. 2 assets, 3 assets. The world is mine. It's my oyster at that point. And then now I just have more cash flow coming in. To now where all that cash flow I can have deployed right back to this house to pay it off. So essentially, I'm building my wealth and I'm going to pay off this house, which I never thought in a million years I would ever want to pay off a house. But I'm going to pay off this house strategically with OPM, other people's money.
What if you take out a HELOC and you have, like, let's say $100,000 left on a house?
Okay.
Does it even make sense to use that money to pay off the to pay off the mortgage? Can you even do that?
No, just leave $100,000 there and go deploy your capital into investments to pay for that. The name of the game is to not pay for nothing.
Yeah, but wouldn't you just get rid of a monthly payment? Or would it only make sense if the interest rate was better on
it depends.
Yeah.
Like, I'm not in a rush to pay off Garland Gardens.
I'm saying if they wanted to just pay off a loan, but then you have another loan. You know, it's like sort of like how you...
Well, you're using a HELOC. Yeah, people do that all the time. They'll take out a HELOC, pay off the first mortgage.
Right.
You know what I'm saying? That way they don't have technically a mortgage. They just have a line of credit, right? But it still has that same 100K just being moved over from one debt vehicle to another debt vehicle. That's all.
Yeah.
So all I'm doing is I'm putting my cash in it, taking it all back out, right? And I'm using that now to it's going to make what I want. Great. I don't have now huge debt on my first mortgage. Now I'm strategically taking out this money to deploy into investable assets that could bring in cash flow. So that way now that cash flow can come back towards me and now pay for this house. And then now, just depending on how much cash flow is coming out of the buildings that I buy, now I can say I can now have an exit strategy outside of the debt. Meaning, on top of my $6,500 mortgage payment, let's just say 50 units with the 800K. Call it 100 units, right? Nah, let's call it 50 units right now. I just want to use easy numbers. Let's just say if that shit is making me $20,000 a month.
Okay.
Even call it $15,000 a month net. After all my expenses from the property is making me $15,000.
Okay.
I can literally save half of that money to keep in the accounts for this, and then I can put that other half to pay the mortgage for this and the home equity.
Yeah, right.
Exactly.
So you could do that too then, right?
Yeah, that's what I'm going to do, and we're going to document it.
But but the thing is, when you do this line of credit, how much, like, what are the rates on that? Because would it make sense to...
I don't give a fuck. Who cares? I'm not paying for it.
No, but you are, because you're taking the money.
I only pay on the HELOC when?
That's what I'm asking.
When I use the money.
Right. But
So if I take $800,000, I'm not pulling any of that money out to use right away. It's going to sit.
It'll sit as a line of credit.
Yes.
Right. So what I'm saying
So
is,
it's like a credit card. You see, you get a credit card, they give you $50,000.
Yes.
But if you don't swipe that credit card, you didn't use it, but you still have the availability. Correct?
Correct.
Same thing with a home equity line of credit.
But there's also interest on that, no?
I didn't use it, so how am I paying interest?
Once
I use it, yes. But I'm buying an asset because I'm going to know what the payment is once I use it. So let's just say the first building I buy cost me $300,000 out of pocket.
Okay, $300K.
And let's just say that $300,000 will cost me $1,000 a month. So now I know that, and when I do my rental analysis, and that's why you need to be on a webinar so you can know how to analyze deals this Wednesday. Go to mgbookstore.com. When I analyze my numbers, that HELOC debt is automatically included into the exactly.
So then that property is now paying that interest or that payment for your line of credit.
Exactly.
Got you. Okay.
And if there's enough cash flow after I do my savings and everything like that for the building, now I can deploy some of that money to pay the first mortgage now too.
But what I was saying before was, let's say if you had, why don't you just pay off the first mortgage with the HELOC? If you're like closer to the end of the payment.
No, because then I don't want to do that.
Because that property is
it's less than 3%. Why would I? It's almost free. You see what I'm saying?
Okay.
The money is so cheap, and once I remove the PMI, I'm gonna save almost $600.
Yeah.
So now my payment gonna go from $6,500 to like $5,800, $5,900. God forbid my taxes don't go up right away, which they probably are. As soon as this shit is done, they're gonna reassess me.
Yeah.
But even if it goes up $300 a month, let's just say my taxes go up from $28,000 to $35,000, right? So that's $7,000. So basically, the PMI I remove is just going to buffer the increase in the taxes. So I'm still paying what I was already accustomed to paying anyway.
Yeah.
So it don't even matter to me about the interest rate on the HELOC because I'm only deploying the HELOC on the assets
that's going to make you money.
That's going to make me money to cover the payment, plus give me more money to help pay for that first mortgage. So even if after I do all my savings because remember.
Oh, I missed that part. I didn't know you were using that investment property to pay for the mortgage and the line of credit.
Yeah.
Okay, so that makes sense.
So if I take out the 800, I'm only going to buy buildings with this shit. I was joking earlier about saying buying Ferraris and shit like that.
Yeah. No,
like, I'll use something else to buy a Ferrari. But I'm going to now take this 800,000. So look, all right, where's my calculator? So if I get 800,000, if I can get like a 12% return on that, that's $96,000 annually, right?
Okay.
Which I'm confident I can get more than that. So you figure, and this is after all my expenses.
Right.
So let's just call it, even if I make 100,000 annually, what's that, 8,300? So that'll be enough to kind of pay for the HELOC and the mortgage after all my expenses.
You own a $400,000 property or whatever it is you said?
No, I mean I could buy any property. I'm talking about creating enough cash flow where I'm getting a nice return on that investment
to cover both. Yeah.
To cover both. So even if the 800,000 HELOC, if I deploy it all, let's just say it cost me $4,000 a month.
Yeah.
Now I know I need to make 10,000 profit after everything else for the buildings to make sure the buildings are still good. But I need to make sure I'm analyzing my numbers so I can deploy this to still make at least 10,000 to cover this because I don't want to pay for it.
Right. But you'll know what your HELOC payment is right before you take the money
Absolutely.
out. So you'll have a number in your head already. All right, this is what I'm paying for the HELOC. This is what I'm paying for a mortgage. This is what I need to make on my investment property in order for it to make sense, in order for me to cover both.
Absolutely. And then what I'm going to do is I'm only going to buy stuff that I can force appreciation into it because I want to be able to refinance these properties after we do some rehabs on them so I can pull my money that I put back in.
Yeah.
So now let's just say one property cost me $250.
Okay.
For example, I got to make sure I get a deal where I got enough meat in the bones to pull out at least $300,000. So now I could pull out $300,000, pay off the HELOC.
Right.
You know what I'm saying? Now that frees up the HELOC again.
Yeah.
And now that lowers the payment on the HELOC. So now that means my cash flow increases, and that means my mortgage now I can apply more of that money to the principal balance.
Wait, why does your payment decrease?
Because if I deployed 800,000, and if I do the BRRRR strategy on some good buildings, and I'm able to pull my money back out of these buildings, now I can just pay back the HELOC of what I borrowed. So if one property I needed 100,000, boom, I was able to pull out 150.
Yeah.
Now I got 150 cash. I pay back myself on a HELOC. And then now my HELOC payment goes lower because what did I do? It's like when you pay your credit card, you pay down your balances, what happens every month?
Okay, that's what I was asking.
Your payment goes lower.
So it goes lower because of your history.
Exactly. So ultimately, the way I'm going to run this play is that the HELOC, again, is going to be seed money to get it all right back. And then it's to keep repeating this shit.
So it's literally a line of credit. Like it's basically credit. Like
Correct.
Like it's like they treat it the same way as a credit card almost.
It's an Amex.
Yeah, that's wild.
No,
That's
it's
crazy.
America. It's America, and God bless it.
But this is only if you have equity in your home, right?
Yeah, you can't do nothing with no equity.
So what if you don't have equity?
You shit out of luck. Next play, please.
Oh man.
Next play, please. You're shit out of luck. You ain't got no equity. You brought wrong. What do you want me to tell you?
Yeah.
Learn the game.
Yeah. Okay.
Learn the game.
I'm actually glad I'm learning on this now because with me, I'm definitely an emotional home buyer. I'm sure I definitely would be, but now it makes sense. There's a lot of I think everybody's laughing at what you just said.
It's the God's honest truth. Learn the fucking game. Which one? You think I'm up here on this YouTube every day for my health? Like, what the hell y'all doing? Pay attention. And this is why I'm glad we was having this FHA versus conventional, because from the beginning you told me you wanted to do this video. Like, we don't plan questions and stuff, y'all. We just come in here, we say what the topic is, okay? Unless it's an article, we may read the article 10 minutes before we go on live, and then we just go on live, right? But I didn't even think to use my house as an example until it came up.
Yeah.
Because then we probably would have made a better video. We'd have probably put some shit on the screen and showed it to them. You know what I'm saying? But ultimately, I still think the information was super, super popping.
No, that's a fact. It definitely was.
FHA versus conventional. What's better for you? I don't know. I don't know what's better for you, but I know what was better for me.
Nah, it makes sense. It definitely makes sense. I wish Mark was in here. That he was the one who inspired this
Well,
question.
send him the link.
Yeah, you can watch it back.
Yeah, send him the link. Watch the replay. But this is what I'm saying, bro. Like, it's all on your personal finances. It's all on your personal situation. It's all on the property type. It's all on the scenario. That's why when people ask questions sometimes, I'm like, y'all, I can't answer this. Yeah, because it's too general. I can't answer this shit. I don't know what's better for you. I don't even know you.
Yeah.
I don't know your credit score. I don't know what your real capacity is. Like, again, I ran this play knowing damn well that I would have to deploy a lot of capital to make this happen for myself. And I was okay with that because I'm not house rich and cash poor.
Right.
I wanted to make sure I can do this to the highest level that I want, and I wanted to be comfortable. So I had to make sure I had a certain amount of money saved for the next couple years so I can handle these bills along with everything else that I'm doing. I had to make sure that I find the right people and team architect, and that was hard, finding the right contractors and things of this nature. This is why now I'm GCing the job myself. It's so I'm like, I'm gonna just hire all the subs myself. So now I'm putting in a lot more work than I normally thought I was gonna do.
Yeah.
But this is something that's important to me. So I gotta now roll my sleeves up and I gotta go out here and I gotta interview all these different types of subs and everything like that. And it's frustrating as hell. People don't show up to appointments. They come late. Like, it backs me up on things that I gotta do. Like, it's annoying sometimes.
Yeah.
Like, it's really annoying. But you know what? This is what I wanted.
Yeah, no, that sounds like a hot mess, but I mean, it'll be worth it in the end for sure.
Oh yeah, when we doing videos in the backyard.
We do videos in the backyard.
Yeah.
We got a super chat from somebody. Tukes is all of us right now. Yeah. I mean, that's the whole purpose of having kind of this whole camera situation, so I can kind of ask questions and learn with you guys. So I think I've said this plenty of times before. But yeah, I appreciate that. Tukes is representing the people.
Oh boy.
I'm trying to.
Toya Green, don't get blocked. Please, Toya. We don't need him because that's all I'm gonna hear for the next week.
You never.
You should listen to me. The people love it.
Yeah. I mean, he'll never say this, but that's the reason why this camera is here. I said, "Yo, I am your audience, MG." I don't even call him MG. It's weird, but like
that is weird.
I'm your audience, Matt. Like,
that's true.
Or I say bro. I don't even say Matt.
Yeah, you don't call me Matt.
But I said I'm the audience, and I wasn't saying it in a cocky way or like, it was
no,
just
you
like,
are the audience.
was
You
just
and
because-
Jordana.
Right. So, but Jordana actually owns, and she owns because of you. So she's in a little bit of a different situation because she's been through the actual home buying process. I haven't gone through that experience yet. So she's still a little bit up there because she's,
She went through the process.
She went through the process. She has more experience than I do, of course.
Yeah.
But for somebody who's looking to get into a home or looking to get into a second home and don't know how to, do whatever it is, I feel like having somebody without the experience is where, what I'm saying, this whole thing is excelling,
No, I think this was a great idea. I'm not knocking it. Shout out to Tukes. Y'all need to like this video though, because it's like 300 of y'all here and it's like half only likes. So y'all need to throw some likes in here, drop some gems, and then go to mgbookstore.com and buy some books and register for the free webinar this week. But yeah, I think this was a very important conversation. I'm glad that we did it. It was a lot of information in here that can help people kind of figure out like what's what. And the ultimate thing is, like I always say, you have to learn the game.
Yeah.
Because once you learn this stuff, it's much easier when you're seeing like your loan estimates and everything like that to like be able to dissect like, all right, which product, what's better. And then you can forecast and say, all right, if I do this with this can be the downfall.
Right.
If I go this route. But if I do this, it might be a little more expensive up front, but in the long term, this might actually work out better for me. You just got to know what the hell you're doing.
Yeah, no, that's definitely how I would go into it. Definitely, this is exactly how you said it. Like, what do I see myself in the next couple of years doing with this house?
Mm-hmm.
Am I going to keep it for 30 years or whatever it is? And if I do, then what's the best option based off of that? But in your situation, it definitely made sense to do conventional for sure.
Toya Green, yes. If you buy a bundle today, or books or something like that, yes. Whoever buys a book today, mgbookstore.com, I will autograph your books for you. Yes. You just gotta DM me. You gotta DM me at MG the Mortgage Guy on Instagram. Show me a screenshot that you did it, so that way I know exactly who you is, and I'll make sure that I will sign your book. And I won't even charge you for that, because usually I charge like an extra, I think, $15 for signed copies.
What is it, black copy? The black book?
Yeah. You get either House Economics or the Real Estate Investors Manifesto. I recommend getting both of them.
How many pages is that? Both of them?
This is 93 pages for the Real Estate Investors Manifesto and 97 for House Economics. It's under 100 pages. Purposely.
I haven't read a book since probably, I want to say 4th grade, probably. It's been a long time. That was probably like, dude, I hate reading. That's a little scary. When was the last time you read a book?
My own books.
When was the last time you read a book outside of your own book?
I don't read books like that.
You could be honest.
No, I'm telling you. I'll tell you what I do with books. I peruse them.
No, but that's not the question. Hold up, that's not the question.
I'm perusing through a book right now.
When was the last time you read a book?
I'm reading a book right now. I have my own version of how I read books.
Okay, so explain this perusing process.
Okay. So I have a book right now. It's on real estate, and it's about raising capital.
Okay.
Right? So I'm about to start raising money for real estate investments.
Okay.
Although I know the game already, it's always great to have more education on things, right? So I'm reading a book, and I'm going to the chapters that I want to learn a little bit more in depth about.
Can you even do that though?
It's in my fucking book. It's in my hand. If I could go to chapter 10 right now.
Yeah, but I'm not gonna see the. I'm gonna read from page 1, so I know what you know.
But we're different. I know real estate already.
Okay, so What was the last time you read a book on something you did not know?
Oh, that's been forever.
That was the right question.
That's been forever. I don't fucking know.
Exactly.
I have no clue. Okay. Give me YouTube.
That'll probably be the first book I read in ages. Just because I feel like there's a lot of information in there, and all this stuff you always say the book. So I definitely feel like I should read it. If I read it,
shout out to Vaughn Gretchen Mitchell. She said both books are great. I finished them in a day. They are my Bible to real estate. Shout out to you.
Yeah, so that's what I'm saying. I've been seeing a lot of good reviews on the book. So not saying that you're not credible or anything like that. Like you know what I'm saying? Like I'm not saying that. I'm just saying that like I feel like I would definitely get a lot of these questions I'm asking. I probably learned from the book, right?
Absolutely.
Yeah. So
the book is fire. Shout out to Jermaine Miller, JM Publishing. The book is fire, bro.
Both of them?
Both of them.
I probably shouldn't read the Manifestors Investo first.
You should start with house economics.
Okay.
That's more your lane. Stay there first.
Okay.
I advise everybody, stay at house economics first, then go to the Investors Manifesto.
Do you learn the loan products in that book?
House economics? Yeah, you learn how to house hack.
Using FHA?
Conventional as well.
Okay.
In the process of the 4321 and everything you got to do, like chapter 1, understanding house economics. Very first chapter. Understanding house economics.
Yeah, I might have to.
Chapter 2, multifamily real estate. Chapter 3, want a house hack? Here's how. Chapter 4, gaining financial freedom through house hacking. Chapter 5, getting 10 doors in 4 years. Your countdown to financial freedom. Oof.
Getting 10 doors. Is that cap? Can you get in 10 doors in 4 years?
Absolutely. Chapter 6.
4 years?
Chapter 6. Yes, you can house hack with a single family property. I just showed y'all my example and my version of how I'm house hacking it. Chapter 7, buying right. Chapter 8, the biggest multifamily home ownership hurdles. Oof. Chapter 9, mortgaging and financing. Chapter 10, FHA mortgage.
Wait, why is FHA mortgage the last at 10?
Because that's what we wanted.
Wouldn't that be in the beginning so you know what an FHA is?
No. Fuck that. You got to know the mechanics.
Okay. I trust you. I'm just...
Understand house hackonomics. Multifamily real estate. Want a house hack? Here's how.
Okay.
It's the blueprint.
Right.
It's beautiful. Leverage the power of house hacking to draw you closer to financial freedom.
Still got to have money either way. But
Either which way you look at it.
Yeah, I'm definitely going to read that, though. Definitely a must read for sure.
All these books I'm putting out is a must read. Everything I do on YouTube is a must watch. You listen to the podcast, Rants and Gems, must watch and must listen. Everything we put out, you go to EYL University, you join the webinars. Like, spend your money with MG, you won't be disappointed. The money you spend with me, and this is no bullshit, no cap. Has anyone ever complained about the blueprint, 1 or 2, any of my webinars, or any of these books that you know?
Yeah.
Who? Okay. Jordana. Only Jordana, because she wanted something about her particular situation when her roof busted and shit like that.
Yeah, she didn't. Your book doesn't, or the blueprint doesn't tell you about pipes bursting, and
That has nothing to do with me.
That's what she said.
That's not my job to tell you that. I tell you,
she got the crib though. She got the crib, and she's
the
doing
blueprint
good
helped
things
her.
with it, yeah, so,
Exactly.
but
But besides Jordana,
aside from the inside jokes that we always have, I don't think so. And honestly, and this is just me being honest, a lot of people got that course, and a lot of people did not finish it either.
facts.
A lot. Probably,
A lot.
I don't want to say the percentage.
A
but
lot. I
yeah.
think like 13,000 people purchased that shit.
It's a lot of information.
And-
though. It could be overwhelming when you first get in there.
Oh,
and
it's
kinda
15.
like-
It's 15 hours.
yeah, but it's there. It's
The
there.
blueprint is 10 times better than any of these books.
Yeah,
I'm not gonna hold you up.
That seems like it's more like, let me read this real quick.
Yeah, this is ain't shit compared to the blueprint.
Okay.
The blueprint is the best shit ever. I'm not gonna hold y'all up. That blueprint destroys this house economics.
Yeah.
I don't even offer to sell the blueprint no more.
I mean, I have access to it.
Me too.
I have lifetime access.
That's a fact.
So I might have to get up. And it's funny because I recorded that whole thing for you. I had no clue what you were talking about at all. For a whole week straight, we filmed that whole course, and I had no clue. Not one piece of information I retained from any of that we filmed.
That
Nothing.
blueprint is special.
I was
though.
probably falling asleep for some of it too. I ain't gonna
You-
front.
you
I
definitely
did
was.
fall asleep for some of them
You definitely
videos that
was.
we did. We'll finish recording, and then he'd be like, "Yo, Tukes," and I'd be like, "Oh, yo, I used to hate that, but yeah, nah, I'm definitely gonna check that out."
The blueprint volume 1 is special. That joint's a masterpiece. It got quizzes in it.
Yeah,
Like,
yeah.
like that joint's a masterpiece. Literally, it got links attached to it. It got all types of PDFs and like all types of calculators. That blueprint is special.
Yeah, I'm gonna have to take a look at that.
It's what you need in life. I ain't gonna hold you up.
All right, so I mean, do you want to answer some questions before we get off, or?
How long we been on this thing for? It's like 7 o'clock now.
Oh, it's an hour and 30 minutes. Yeah.
Yeah.
I didn't even have the thing on the.
Oh yeah, this is way too long. This is like 90 minutes, bro. What are we doing here?
I don't know. We just
I'll do 3 questions and I gotta go.
3 questions.
Yeah, I think I gotta go drink my sorrows away.
You shouldn't even be drinking, to be honest.
I shouldn't, but after tonight, I'm not drinking no more.
You know, guys, he said this like 2 weeks ago. Just so you know.
I had a dry January. This February has been damp though.
We're like 2 weeks in. All right, let's answer like 3 questions. Oh, somebody asked.
Shout
me
out
a
to
super
everybody
chat.
with the badges too.
The badges.
Yeah, a couple people. No, I mean badges, the super chats.
Let's see. Okay, so. Oh, Matt, is your company qualified to do VA loans, or is your company qualified to do VA construction loans?
No, we don't offer that.
Is that a thing?
Not really.
Not really. Okay.
Not really. It's not a good product.
It's not a good product.
Yeah,
Cool.
it's too much of a headache.
Let's see.
Yes,
What-
this webinar is for newbies who want to get into the business. Go to mgbookstore.com and sign up for the webinar. Yes.
What would you consider documenting a home buying process with someone and uploading on your channel for content and educational purposes?
I would love to do that.
Consider documenting a home buying process with somebody.
I would
and
love to do
uploading
that
on
from
your
the
channel.
beginning. We get them pre-approved. Like, that's actually one of the ideas I want to do. Is
Wait,
like,
so we should do that with Tukes then, because
we could do that with Tooks. Yeah.
yeah, because that seems, it's if
That's
I'm filming,
it's easier.
if I'm filming it, like it'd be a whole.
Matter of fact, we're going to do that
two-part-
with Tooks. I like that.
Yeah,
Tooks buys his first house. That'll be the series.
that's huge. That's huge.
Yeah.
Tukes buys his first house. I think it'll be more, because we could do Jordana too, but she already has a crib. So if she buys a second crib, we could document her situation.
We could do that too. Yeah.
We could try.
That would be good.
The links for the books are in the description. I think I have all the links in the description for the books.
I'm going to put it in the chat right now.
Yeah, you could do that. Somebody said Tukes just read the books. Yeah, I'm gonna read them. I'm gonna read them for sure. Will we get free ebook updates after purchasing the book? And if and when the rules change.
What?
Will we get free ebook updates after purchasing the books if and when the rules change?
No, the only way you're going to get free ebooks is if you join the book club community that we have rolling out. I think we're rolling that out in the next week. So we're going to have a book club community for MG Bookstore, and it's a community. I think it's like $19.99 a month or something like that. So with the book club community, we're doing the book review once a month, right? Not just my books. I'm going to bring in other authors and other real estate books and everything like that once a month. And then also any of the ebooks that we release, you'll get the ebooks for free.
Okay.
So as part of the value add of, being a part of the book club community, you'll get all the ebooks that we put out for free. And what we're going to start doing is like once a month, put out a new ebook. So not only are we going to do physical books like this and try to do 4 to 5 of these, but when I was having a conversation with the team, I'm like, yo, I want to put out more because I got so much information. So we decided like certain things, like, look, even for like DTI, right? That's not a full feature book.
Right.
But DTI, a whole DTI play could be an ebook, 10 pages breaking it down. PMI, right? The Good, the Bad, and the Ugly. Or I'll name that book, PMI is Not the Devil.
Yeah.
Right?
PMI is, okay.
PMI is Not the Devil. That'll be the name of that ebook.
Right.
And then that's another 10 pages of breaking down PMI, the Good, the Bad, and the Ugly.
Right.
You know what I'm saying? And how to really maneuver and the programs and da-da-da. So like those will all be ebooks that if you're part of the book club community or the bookstore community, then you pay your $19.99 a month. You'll be able to get all the ebooks that we drop. You'll get, I think we're going to give like 20% off of any products that you purchase.
Yeah.
And then we do a once a month Zoom call discussing books and answering questions and things of that nature.
It'd be lit for 20.
Yeah. For $20, I mean, shit, that shit is almost free.
Somebody had a good question here. Will the banks take gold or silver and shoebox money as down payments because you don't have 10 to 20K in the bank?
Will it take what? No, we want money.
Gold or silver and shoebox money as down payments.
No, we're not taking shoebox money. And you will have to convert your gold, I guess, into cash.
And put it into your bank account?
Mm-hmm.
So you can't even use cash for a down payment?
No.
And when you're doing any...
No, shoebox money is... where did it come from? How do you know you're not a drug dealer? How do you know you're not running crimes and you got all this cash? Like, it's rules and regulations.
Do they look at the money, like, so with the down payment, that money they look at to see where it came from, or does it?
Absolutely. It has to be sourced and seasoned. That's why if you're going to make large deposits, remember, we look at your last 2 months of bank statements. So if we're in February, so we're looking at December and January.
Yeah.
Right? So if you got a $50,000 cash deposit from your shoebox money in January, we can't use it because you can't document where it came from.
So you can only document things that are constantly coming into your bank account, or...
But if you put the $50,000 in January, just don't apply for a mortgage to April because then you only need February and March. So we don't see the deposit. It looks like it was already sitting there. So that's just the workaround.
So just have the money sitting in there prior to the last 2 months. So the third month out.
Correct.
Because you're only looking at the 2 months. So if that
Correct.
money's just chilling there, it's like, all right, we already see 50K.
It's chilling now. Exactly.
Oh, okay. That's good to know. I didn't even know that either. Wow, you learn something new every day. I'm about to be a real estate. I'm about to be my real estate license. I'm about to get my real estate license in New Jersey. I would love to continue to grow as a salesperson with you, MG.
Come to the webinar this week. Go to mgbookstore.com. You're about to get your license. You definitely need to be on this webinar because I'm catering this webinar to the real estate professionals. Whether you're a new agent, new loan officer, you're about to get licensed, you need to buy the VIP so that way you can be in day 2 of it because that's how I have some special guests coming. But like, you need to be on this webinar so you learn the game because your real estate license is only going to teach you the law. It's not going to teach you the game. I'm going to teach you the game. Somebody said, MG, be my Valentine's. I don't like you being sad. Oh, wow. Okay, Shannon. First of all, Shannon, I appreciate the super chat, but if you asking me out, you got to give me more than $2, baby girl. Like,
I'll take the $2.
You could take the $2, but I'm worth a lot more than $2. Like,
I mean, it ain't about worth $2. I'll take the $2.
I'm taking the $2 too, clearly. But she's asking to be my Valentine. And she said she don't like me being sad. Do I look sad today?
Hold up, but do you have a Valentine?
No, I don't.
So that $2 might be the play. That $2 might be.
You
the
already
play.
knew the answer to that, though.
I know, but I'm just saying.
But you knew that you're choosing violence right now, bro.
I'm not choosing violence.
I told you I'm already
just,
like, come on, bro.
I'm just saying, Shannon. Oh man. All right. Well, I mean,
This nigga, man.
you slide in DMs.
Yo, stop, bro.
MG the mortgage guy on IG. Somebody said I was approved for $275,000 FHA in Rhode Island, but can't find anything that doesn't need renovations. I'm gonna have to try a 203K.
She said no. I wanted to make you smile. She really going hard.
$2 making you smile though.
It damn sure is. Thank you, Shannon, baby. I love it. Give me another $2, please.
Oh my gosh. All right. So can I get back to my thing here?
All right, go ahead.
So, somebody said, oh, this wasn't even a question. They said they got approved for $275,000 FHA in Rhode Island, but can't find anything that doesn't need renovations. I'm gonna have to try a 203K instead, but Rhode Island Housing offers this loan. Rhode Island Housing looks like they're not much help though. I don't know if they want your input on that or.
I don't know what they want from me. I don't even understand the question.
Yeah, I think that they're just saying that they got approved for FHA, but they can't find any cribs that need a renovation or doesn't need renovation.
You're looking in the wrong places, or you got the wrong team, because there's always a house in every market that needs renovation.
That doesn't. She's trying to find a house that does not need renovations.
Oh, why? Find something that needs renovations. That's the key to build wealth.
So you're never gonna find a crib that you just like, oh, this is perfect. You don't have to do no work to it. It's rare. Is that what you're saying?
She said, yo, she's going hard. She just threw another, yo, shout out to you, Shannon. She said, I got you. I got you. Don't play. I'm old school, love. All right. Go ahead, Shannon Smith. She put up a 20 now. Let me see 150 come out your pocket.
All right,
Let me see 200. Put another zero there, man. Come on, man. What we doing here, man?
Yo.
It's expensive pain over here, baby
That's
girl.
why Shannon came to play.
Come on, Shannon. Throw another zero on that joint. Then you'll really get my attention.
Yo, 200? That's what you were at 200,
Yeah.
you're saying?
At a minimum.
This guy's crazy.
But what happened?
So no, I'm saying that you can't. So you're basically saying you cannot find a crib that you don't have to do renovations to.
Am I?
Anybody, period, in general. She's saying that she can't find. Is this a girl?
No, she's saying that she wants to buy a house, but every house she's looking at
Needs renovations.
Right. I'm telling her go buy one of those houses because she can probably get a better price, put the renovations in, and have some equity in it. Versus me buying a house like it's again the Ferrari house I told you about. Well, I'm gonna buy this shit for 2.2, and I'm still gonna have to fix things in here. I'm gonna put another 200K into it. Why am I do that shit?
Yeah.
How am I gaining from this?
Right. Okay, my credit is excellent, but which loan is best if I have little down payment but excellent credit?
You tell me, Tooks.
I wouldn't know, but I mean, if with that credit, I don't know. I think you still need to know more information, though.
Number one,
need to know what the plan is.
What does bad credit mean? Like, what's the score?
Well, her score is 790 to 810.
That's not bad credit.
That's excellent credit.
That's amazing credit. That's like a Rolls Royce of credit.
When it comes to real estate, what's excellent credit? What's like the 750?
Nigga, any score that you can get a deal in is an excellent credit to me.
Okay.
Like, I don't care if you got a 790 or a 690. Who cares?
Yeah.
I know people who got 800 credit scores that don't own shit.
But they can get approved for stuff?
Yeah, but they don't own shit.
Yeah.
So what's the sense of you having this great credit if you're not leveraging it the right way?
I mean, you could have. Maybe you just don't even. I mean, if I had an 800 credit score, I wouldn't be in anything either because I don't have enough information to move forward. I like to research everything before I jump into stuff. So that could be this person's situation. You never know.
But if she has low money for down payment, then you got to go with the low down payment loans.
Oh, I missed it. Little down payment. Correct. Yes. Yeah.
Yeah, but if you have excellent credit, I mean, the credit score is just one aspect of it. Like she said, so for her, it's about the low down payment loans.
Yeah. So low down payment would be, I mean, FHA, you put the least amount down, right?
Correct.
So then that's probably her option.
Correct. Or NACA.
If she wants to go through that process.
Correct.
Right. So what is technically considered a large deposit?
It's a whole, depends on your income, but typically anything over $1,000. You know what I'm saying?
$1,000?
Depends on your income. Like if you're making $50,000 a month and you deposit $1,000, it's nothing. You know what I'm saying?
Yeah.
But if you make $3,000 a month, you deposit $1,000, it's a large deposit.
Yeah. Makes sense.
Shout out to, I can't pronounce your name, but you just said you just got the VIP. Shout out to you. We need more VIPs. All right. It's getting hot in here too, bro.
Yeah, it is pretty hot. How do we get you to come on our show as a guest?
I don't know.
This is Know Thyself TV.
I don't even know. I really haven't been doing podcast shows for other people lately.
Yeah, you haven't.
Yeah. I think I'm done with that.
How are you done with that?
I just think unless it's like, I don't know. I think unless it's like something that makes both sense and sense for me, like I don't know if I'm gonna do it.
I think we should do more local stuff.
Yeah, bro, but the local shit be like, oh.
Yo, I know what you mean, but like,
That's what I'm saying. Like,
but I think you should just do it just because. Like, I feel like
no, I don't need to just do anything just
you
because.
don't. I never said you need to. I think you should. I'm just saying I think you
But
should.
I don't think I should either. Like, I do enough of this already.
Yeah, I'm saying, but like every now and then it's not bad to jump.
If
on
it
something
makes
like
both sense and sense, then yes.
that. Yeah.
Like Handsome Homebuyer wants me to come. Charles wants me to come on his. He did our podcast, so that's like, all right. You know what? I'll jump on your pod.
Yeah.
At some point in the next month or so, right?
Right. Okay, I see what you're saying.
Femi, my man Femi, he connected me with Charles. He wants me to come on his show. On the strength of the love, and Femi's my guy, I'll do his pod. But I did Mike's podcast. I did Sean's podcast. Like, I did local people stuff.
That's what I mean. So yeah.
But again, it has to make sense for me.
Yeah.
Like I did Sean, he's my guy. So you know what? I'll do your pod. I like what you're doing. Like he actually hit me up today talking about he loved what we're doing with the channel. He been watching the videos. He's tapped in.
Who?
Sean the Realtor.
Yeah, he was here. I mean,
Yeah, he came in. But like, I'll do it if it makes sense though. Like, I just got off of EYL's podcast, right? That's a big podcast.
Yeah.
Like, I'm trying to get on big shows right now. Like, and I'm having these conversations, but like, at some point, you got to say to yourself, does this really make sense for me right now? And sometimes it just don't.
Yeah.
Because it's a lot of work to go do somebody else's pod. Now I got to go there. Like, I got to do this. I got to block out my time for it. Like, what's going to be the reward for me if I'm doing it at the end of the day? How does it benefit me?
That's how I look at everything in life.
Everything in life. Yes, Toy, I would do a lecture at a university. See, like, things like that. No, I don't have a publicist. I actually need a publicist. But, like, it's about, like, I got to figure out, like, what makes sense, what doesn't make sense, what's going to be the right moves to make. Like, us doing this is the right move. It makes sense for me to block out my time to be able to film in here because it helps the whole overall ecosystem of what we do from the media side.
Yeah.
And the media company. So it makes sense for me to block out the time and we come in here and we put in our work. But to be on everybody else's stuff, that don't make no sense sometimes because then it becomes overload of you. So if I'm going to go, like, I'm going to do an EYL any day of the week.
Yeah.
Because that's going to get 100,000 views in 30 days. I'm going to go in a Breakfast Club because that's going to get their views. You know what I'm saying? We did the 85 South joint. They released it kind of late, but I think that was at like 70, 80,000 in the first month so far. Right? Like, these are things that help me. Like, once we get on high-level conversations, that will freaking help me. Right?
Yeah.
Like, and it will help those people's platforms at the same time. So it's like, it has to work both ways. You know, when I go on Market Mondays, those things help and it works. But when you do just like anything just to do it, like I'm not at that stage no more where I just need to just be doing a bunch of stuff just to do it. Like I need to get back on Cheddar News. Jordana's working on something on that, right? I need to get on CNBC. I need to get on MSNBC. I need to get on Ebony. I need to get in Black Enterprise. Like I need to be doing like high level stuff. That's the goal.
Yeah.
Now, once you start getting into those, now you're the subject market expert. That helps solidify the authority in this subject of real estate. So for me, that's what I'm really more so focused on. And that's where, you know, even Tanasia was like, do you have a publicist? No, I don't have a publicist. I've been trying to find good publicists that are willing to work with me. But that's even difficult too. Because those are the opportunities that I need.
Right.
I need to get on Hot 97. I need to get on Angie Martinez. I need to get on these things. I need to go hit up Angela Yee and get on her new show, right? Like, I need to get on bigger platforms because the bigger platforms will help grow the overall brand, but also get the message out to more people.
Agreed. I agree. Somebody said that you should talk. Toya said we should talk.
We should what?
We should talk, she said. She might have an opportunity or something like that.
DM me.
Somebody asked the same, Melanie asked, she said, thanks for answering my question. Can I set up an appointment with someone in your group to look at my paperwork for a loan?
Absolutely. If you go to, in the description of this video, we'll have the consultation links. So you can schedule this consultation in. Make sure y'all like this video too. We've been on here for a long time. So make sure y'all like this video as well.
I got hip to you from, somebody said, I got hip to you from 85 South and now we stuck.
You see what I'm saying? Didn't I just not say this?
Yeah.
Right? So if you just got the local, like you should do more local stuff. No disrespect. Respectfully.
Yeah.
Like, where is that going to be deployed and where is this going to reach? You know what I'm saying? Like, when I do EYL's episodes, even though I'm on the network and people know I'm a part of it, but a lot of people will coming over to that channel still new too. They don't know all the players and everything like that. Then they find out about me. Then they come over here. 85 South. We did that in August.
Yeah.
And they just dropped it in January. Boom. Now we're getting new viewers because I'm on a different type of platform. It's a platform with 2, 3, 4 million people on this shit. Like, that makes sense.
Yeah.
Now, I'm not saying I wouldn't do.
It's just got to be beneficial to both parties. Basically.
Both parties, yo. And that's the thing, right? The reason why I'm in a position with EYL is because I added value from day one. If I wasn't adding value, I wouldn't be in the positions that I am being business partners with them.
Right.
Like, literally right now, Troy, they all at the Super Bowl. Troy just introduced me to a very high net worth connect. Just literally right now while we're doing this, right? Plays are being ran because it all stems from the value that I add, and they know, like, all right, MG, this is what you're trying to do? Yo, we got it. Da-da-da-da-da. Boom. It's value add.
Yeah.
Because they know it's for something for Rants and Gems, and it's going to help elevate not only my brand, but the network brand as a whole.
Right.
So I think we have to get out the mindset that everybody just needs to do something just to do it. You have to look at the bottom line. Does this make both sense and sense? And if it don't make both sense and sense, then why the fuck am I doing it? At some point, you got to say no. And that may suck. That might suck. Now, what we do, we've done plenty of things that didn't probably make sense for us, but made more sense for the other people. And likewise, people have probably done stuff for us that didn't make sense for them too.
Right.
But they know, we'll do it because now we're building in that sweat equity with y'all because we know where y'all going to go. We see the work. We see the consistency. Like, so if someone asks me to be on your show, and quite frankly, if I've never even heard of it before, and I'm like, what show is this? You know what I mean? It's hard for me to really want to do it unless it's like something that I just been under a rock and like, damn, they got like their pages popping. But people be hitting me up all the time to do shit. I be looking at their page like, what's going on here?
Yeah.
Like, your page looks trash.
You crazy.
No, it's serious though. Like, come on, come on, bro. Let's call a spade a spade. If you care about this and you really want to do this, then you need, and how you do anything is how you do everything.
Right. You always say this.
How you do anything is how you do everything. So if you're not going to sit out here and have a dope presentation, even if you ain't got a lot of money, you don't need a lot of money to make your page look good.
Right.
To make it look clean, to put out high quality clips. You got the Fiverr boys up there, $5, $10 to make you some clips. Like, it's not that expensive if you really wanted to do it. You know what I'm saying?
Yeah.
So, like, ultimately, if you're not even putting it out there like that, then why would I do that?
No, I agree. Yeah, I agree.
Would you do it?
I think in my stage, I would right now, just to be, I mean, that's how I kind of grew my own brand. But I think with where you are and the people that you're already affiliated with and the relationships you've built, I think you're way past that now. It's been a couple of years now. So I think that it depends on if you're just starting out or not. But everyone's different. So in your case, you know, I wouldn't. It doesn't make sense for you. But for somebody who's starting out, I think it's very important.
It's very important. If you starting out and you're trying to build, you need to be everywhere.
Yeah.
You can't tell nobody no.
Yeah.
You ain't there yet.
Right.
We've built something over the past 4 years now doing this.
Right.
Like, we were flying out to Max Maxwell joint. We were doing all types of ish.
Yeah.
Like, fuck it. We got to go do what we got to do. We got to go to North Carolina. We got to go to North Carolina. Fuck it. Right?
But there's levels. And I think the level that you're at now, you don't need to.
Yeah, I'm not doing anything just to do anything. Not right now. Not right now. My time, especially in the life that I'm living right now, my time is way more important to me. Especially, like, a lot of things in my personal life is getting more structured. Like, I can't be sitting around here running around like a chicken with my head cut off.
I agree. Amen to that. This link that you put in the description or in the comments is a link, because I don't put that in the description.
Yeah, that's the link for the consultations.
But a lot of people are saying the link doesn't work. I
just sent you the link.
Okay, so I'll probably change that out and see what's up with that. All right, last question. Any advice on passing the self-sufficiency test on a 4-unit FHA? Is the only option more money down? I haven't asked the lender that I'm approved with, but it might be right on this line for it might be right on the line for 75%.
What?
Yeah, I know you were going to say what. Any advice on passing the self-sufficiency test on a 4-unit FHA?
There's no advice I can give you. The numbers are the numbers. Look, you can't make the math. If the math ain't mathing, it's not mathing. It's not self-sufficient.
So is the only option more money down?
Yes.
Okay. Cool. Well, there you have it. Yeah, we've been on here for like a solid 2 hours, bro. But it was cool. I mean, it was chill. I learned a lot. Once again, my boy Mark didn't pull up, but if he does, this is for you, bro. Hopefully we answered your questions in terms of if FHA is better for you. And yeah, this was good. Somebody said I started following you guys like a month ago. Thanks to the 411.
Well, I appreciate you. Welcome to our world.